Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and is today the 20th? Wow, the 20th already. Oh my. Um, let's kick things off with the pre-market activity of IBM, which reported earnings last night. We'll go through the pre-market futures, and then we're going to talk a little bit about gold. I'll give you my thoughts about gold within about a 10-minute time frame. So IBM this morning, they reported fairly decent earnings. Let's drill down to a 4-hour chart. And you can see they're doing quite well. The close yesterday was 137.92. Let's go to a last tick. And the last tick was 143.14. So a pretty sizable move for IBM. Now, is it the cause of the reversal that we're seeing across the board today on the markets? Probably not. It's not the bellwether it once was. I mentioned last night on Market Wrap with members that in all probability we were going to get a turnaround Tuesday. They were going to try to rally the market to shrug off Monday. If they managed to close it positive, you're going to hear the talking heads say, it was a one-day thing. Don't worry about it. We're going to the moon. Don't worry about valuations. And you can see that this morning, the S&P 500 is up just shy of a third of a percentage point. What I do want to point out, though, is that on this 4-hour chart, we broke out this 4-hour bar, which closed at 5 a.m., and this bar here, which opened up at 5 a.m., we are giving back a lot of those gains. Now, the thing to remember is that this bar doesn't close until 9 a.m. Eastern Standard Time. So maybe we'll rally back. We'll shoot to new all-time highs for all we know. We're just keeping an open mind. Excuse me. I need my coffee. Let's move on to the NASDAQ 100 anyway. And very similar to the S&P 500. Now, what we want to do, after a sell-off like we saw yesterday, it's not unusual to get a rally back. People are non-believers. They believe that this market is going to continue higher forever. I've traded 2 prior bubbles and multiple corrections, and I've seen it over and over and over again. It's the initial wipeout of the retail investor is quite devastating. Now, I'm not saying that this is necessarily the ultimate top. I'm a believer that once we begin to see yields spike past a 2 handle to 2.5 in that range, that's when the entire market, cyclicals, technology, everything just goes like this, because the United States cannot afford to service the debt. If we were ever able to normalize, say, 5% on the 10-year yield, the amount of interest payment alone, forget about principal, the interest payment alone would equal the defense budget. Think about that. That's around $600 billion a year. So that's why they have to keep printing. That's why they have to have inflation to inflate away the debt. So the problem for the Federal Reserve comes when they're unable to manage the longer dated maturities. They have an iron grip on short dated maturities, 3 months, 2-year notes. They've got that under control. Once you start going out 10 years, 20 years, 30 years, much deeper pool to manage. And that's when they run the risk of the markets taking over the yield curve. So getting back to the NASDAQ, what we're looking for here is an answer to a question. Do we put in lower highs? Will we rally, which we just may, rally up to this upper band of resistance and do as we did already twice before? Once, twice, potentially 3 times, putting in a lower high. And we've done it twice before, broken down to new lower lows. Here, here. So what we want to do is create an alert. And there you have it. Now, moving on to the Russell, which is up 0.68%. But I'll tell you, we have a short position here and on the Qs. So we did well yesterday. Now, we've been here before. This is again a 4-hour chart, Russell 2000. And we probed for the, well, let's extrapolate this left. 1, 2, 3, 4. Let's call this 5 times. 6 times we have now retested, or come in the neighborhood of retesting this lower band of support. So again, we want to take our crayon out and ask the question, will we put in another lower high and break to new lower lows? Folks, if we take out the lows of the 19th, the Russell 2000 is in a ton of trouble. So I have an alert set here. I'm going to move this up. And we'll get notified on a new lower low. Now, at any point, as we rally up and into what we perceive to be resistance, we can lean into the short side and add more to our position. And then as we break to new lower lows, if we want to momentum trade the short side, if we really feel that there's blood in the water, then we will lean even further into the short side. But I prefer to add on a counter trend move, because you know if you break out above this upper band of resistance, well then you may want to look to lighten up on your short, because the trend may be in the process of changing. You also want to look for a pullback, a higher low, and then a breakout above this upper band of resistance. That's when you get a little bit nervous about being short the market. Because remember, the Federal Reserve is out there. They're not going to stop printing money, no matter what inflation says. They don't care. I always like to say about the Federal Reserve, don't listen to what they say, watch what they do. Now, last week, we did listen to what they said in front of Congress, but we also validated what they said in front of Congress, meaning PPI data came out last Wednesday. Hot. Import-export prices came out extremely hot, double-digit hot. And Fed chair walks up to Congress day one, reports to the House of Representatives, then the next day the Senate. Oh, he was as dovish could be. Don't worry about it. Yeah, inflation is not transitory anymore. No, it's going to be here a while. And but yeah, we're going to print money. We're going to print money. Oh, you want to pass that $3.5 trillion human infrastructure bill? You got it. We'll finance it. Don't worry about it. So you hear him, but you want to validate what he's saying. How do we do that? Well, we take a look at the Fed's balance sheet. We'll do this on Thursday night this week. And normally they build up around $120 billion worth of guaranteed purchases of mortgage-backed securities and treasuries. Last week alone, they did over $100 billion worth of bond buying. So were they manipulating the yield curve last week to keep yields low? Think about it. So we validated what they said was exactly what they were doing by simply taking a look at their balance sheet. And the Fed is on autopilot right now. So watch out here for a potential breakdown to new lower lows on the small caps. I'm going to leave the dollar and gold for last. Let's go to bond prices. Now, there's been a big push lower on the 10-year yield. We are nearing stiff resistance. And with this morning, we have put in a new daily high and a new weekly high. But you're seeing a little bit of a fade as we approach this upper band of resistance. So do we stall out here or do we break out? That is the question of the day. That's what we're going to be watching. Because if we do break out, you're going to see strength in tech, if anything. Not that declining yields helped yesterday, but if we get a pullback and yields rally, well, then you should see a rally in the small caps and some cyclicals, maybe energy. The transports are a basket case. Let's take a look at crude oil. It is up nearly a half percentage point, perhaps basing at support. Silver. Good morning. Arena of Idea Racing. I always love that name. Where's silver? Where's my silver? They switched up these quote lists. There we go. Silver is up slightly this morning. Not much of a bounce back here. But I'll tell you, you take a look at the silver miners, you take a look at silver, we're nearing a buy point. And we're going to talk about gold now. But before we talk about gold, and both in terms of technical analysis and in terms of seasonality, we first want to take a look at the US dollar, which has been on a tear, and is the proximate reason as to why you're seeing commodity prices come in, especially with the precious metals. So as long as the dollar remains strong, that means a difficult time for the precious metals and the associated mining trades. So let's take a look at the US dollar this morning. And it managed overnight to put in a new daily high, but it faded. So we're simply consolidating here. Now, Jeff Gundlach, I mentioned this to members last night on Market Wrap. Jeff Gundlach, I watched an interview with him over the weekend. He recorded it last week, but he's got a price target on the US dollar of 94 on the Dixie basket, which is exactly what you're looking at right now. At current, we're at 92.872. We hit a high overnight of, what was the high? 93.037. So there's still more room in the tank here for the dollar to continue up higher. Now, what we're going to be watching out for are warning signs that the dollar is beginning to peter out. And one thing I'll point out is that when you take a look at a 15-minute chart of the dollar, you start realizing that the end may be near for whatever you're trading. It could be a widget for all we care, cupcakes, gold, equities, whatever. When you begin to see volatility, price volatility, and you saw that yesterday morning when gold overnight, Monday morning, the early hours, pre-market, really surged up higher. And when the market opened yesterday, you saw a really horrific sell-off in the dollar. And what happened subsequent to that is that we did rally back. We closed positive on the day. The closing price action charts, like on stockcharts.com, don't pick up the pre-market action here, but this is a pretty bearish event. This is why we pay attention to the pre-market trade. And we have since rallied back. No new high just yet. You can see here that I have an alert set. I want to get notified if we do break out to new higher highs on the dollar. because we are long of the gold mining stocks and silver mining stocks. So as long as the dollar remains strong, then that position remains under pressure. But we're reaching a point right now where, you know, when you take a look at the chart of these equities, the silver miners, gold miners, they're really oversold, especially when you take a look at the silver miners, which have just been hammered, the SILJ hammered. And we're going to be looking to buy this sell-off. If you like them 10% higher, you got to love them 10% lower, especially if you believe, as I do, that the dollar is, this rally is probably near an end. It's probably got more fuel in the tank. I'm not calling the top yet. The daily chart still looks good. Weekly chart still looks good. But the weekly chart, we are at a resistance level. We hit it, pierced it yesterday, and then we pulled back below it. Still 4 trading days left to go. We keep an open mind. El McNeil, good morning to you. Now, the dollar is at a point now where I want to do is I want to take my crayon out and I want to start drawing lower highs, potential lower highs. Consider this a daydream. So a slight lower high here. And here's our lower low. And in all honesty, what we could do now, because we broke this lower low yesterday but bounced back, we could set up an alert here. Because when this dollar goes, assuming that the overall market is not in free fall, you're going to see a big counter trend rally in gold, silver, the miners. And given the monetary and fiscal policy of the United States right now, this is probably going to be a horrible sell-off. And you can see we're seeing a little bit of, this is only a 15-minute chart, so I don't want to talk about a 15-minute chart too much. We're not day traders here. You can see that we're reversing a little bit on the morning, and we're going to remain stuck in this trading range at best for a while longer. So keep an eye on this. Now, when I analyze gold, I first always look at the US dollar, because the dollar is the tail that wags the gold and gold mining dog. That should be plural, dogs. Now here's gold. Now, gold, I'll tell you, you know, throughout the past several trading days, despite the fact that gold is well off the highs of the month, not bad price action here. Strong US dollar. Gold did break the 1800 mark, and I've been saying to members, it's got to hold 1800 because that's a psychological support level. When you look back over the past few trading days, we did break 1800 here, but we bounced back. And we are at current flirting with a breakout. We're trying to break out. We did break out here. We were rejected here. Now we're trying to break out yet again. We were up higher, obviously, as noted by the candlestick, but we are trying to punch back at current. So let's create an alert here. We just jumped significantly. Okay. You're seeing on RSI higher lows. This is a 4-hour chart. It's not insignificant. Yes, it's an intraday chart, but I like to use it because it's half of a daily chart, right? So it's not all that volatile, but it gives you a very good insight as to how he may trade on the day, especially when you get that closing bar at around lunchtime for the first 4-hour bar of the session, normal trading hours. We're good here. So we have RSI higher lows. Let's take a quick peek at our gold mining trade. We have two of them. NUGT is one. This is the leveraged ETF, putting you long of the large cap gold miners. We're actually down 2 cents relative to the close yesterday, so nothing really happening here. We're also long of the GDXJ, which was pummeled. And it closed yesterday at 43.38. We're up slightly on the GDXJ. And I did mention the silver miners. And they've just been absolutely hammered. So there's opportunity to be had here. So we're probably going to be adding more to these positions as we begin to see strength. I don't want to buy on hope. I want to buy on fact that we are beginning to see weakness in the dollar and that we have an opportunity to add on a consolidation of these names. Now, when you take a look at gold on a seasonality basis, this is brought to you by TrendSpider, automated technical analysis. Use the 35% discount code below if you're interested. So gold, this is the GDLD, the Spider Trust. Let's get rid of this. You can see that despite the weakness in the overall market and despite the strength in the US dollar, we've been consolidating sideways for the most part. This 1800 mark is really, really, really critical support. Let's go to a daily chart. Now, for whatever reason, this chart is not showing yesterday's price action. What happened here? Because we did eke out. Here it is. Okay, there we go. I knew we eked out a gain yesterday. I was surprised. Okay, so here's yesterday's price action. Now, the interesting part, this is the GLD, and this is the first time I've seen this, where spot gold closed down slightly yesterday by about $1 and change, but the GLD closed up. So when you see that, normally that means that you have a derivative that is leading the price performance of the underlying commodity. And it closed up. Now, we do have support levels below. This is the GLD again, so we're going to use their pricing 168.03, critical support on the GLD. We were in an ascending wedge formation as noted by the automated trend lines. And this upper band in red was acting as resistance. The problem, you actually have a megaphone formation going on here. You have lower lows in trend occurring and higher highs. Very interesting. Let's throw back up our drawings, but we do have clear and defined support below. Now, when you take a look at seasonality for gold, it's pretty interesting. July is usually a pretty good month. Going back 13 years, a pretty good month, up 69% of the times. August, remember, it's 1 year ago in August that we hit new all-time highs last year on gold. So we're heading into a very seasonally favorable period of time. The best month of the year, in fact, for gold. Now we could drill down here and take a look at it on a weekly time frame as well. Week of the year. And we are here at current. This week is generally up 54% of the times. Next week, over the past 13 years, we're only up 33% of the times. So if seasonality is any guide, we're going to get more volatility here on gold. And I think what we're seeing on gold and the miners and silver is a shakeout of week longs. That's what we're seeing. I mentioned it last week when NUGT closed above $60 per share. I told members, I said, listen, the chart looks bullish. I like the fact that we closed above resistance. I'm not buying more because I think that on gold and on the miners that there's probably going to be a shakeout, a blowout of week longs in an effort by institutions to get rid of them and then buy shares on the cheap into seasonally strong August. And I'm standing by that. So watch for another shakeout here on gold potentially. Maybe we've already had it. But then week 32, which brings us into August, well, that's up 82% of the times over the past 13 years. So get ready, if seasonality is any guide, for a ton of volatility in gold. Now, taking a look at the gold mining stocks, we'll use GDX. It's the biggest one out there. Yesterday was a very bearish day. We broke down below not one support level, but two, as noted by these automated trend lines. So I'm not buying this just yet because the probability of a continuation move lower, especially with the strong US dollar, is very, very high. Now, when you take a look at seasonality, let's go to the monthly view first. We'll do a deeper dive. July, we're up around 54% of the times. We close up 54% of the times over the past 13 years. It gets a lot better in the month of August, which is the best month of the year, at 73% of the times. Weekly view, weekly seasonality. Now we are here, generally up 54% of the times. Next week, it's probably going to be a bit of a bloodbath if seasonality is any guide. But then August, very strong results, especially in the back half. So short term, very, very short term, I'm meaning in terms of days. Beware here of potential continuation breakdown. The however is, if we manage to close back above both of these support levels, that's a very bullish event. Weekly chart. Hey, Tommy, good morning to you. Morning drop like button. Crazy day yesterday. All down, especially oil. Yep. Yeah, rough day yesterday. Weekly view, we have a new weekly low. So the path of least resistance remains unchanged here. And that is to the downside until it stops. So no rush to go buying more just yet, unless, of course, going back to the daily chart, we manage to rally back and close above these resistance levels. In fact, what I want to do is create an alert, no sensitivity. I want to know if we close back above and we'll keep this active for next 10 days. And we're good to go. And with that, folks, thanks all for joining in. Clark, good morning. And everybody have a profitable trading day, and I will talk to you soon. Be well.